The market is a strange creature. It never announces its turning points with clarity. It shifts its mood in whispers, not in shouts. The crowd always hopes for a trumpet, a clear sign, something to confirm what they already believe. But the truth is quieter. It comes in the small tremors of price action, in the hesitation of a ticker that once ran freely, in the dulling of momentum that once felt unstoppable. Those who wait for certainty miss the signal. Those who learn to listen to silence exit before the storm. Every great trade begins in confidence and ends in doubt. Somewhere between those two lies the test of the trader's intuition. Prices rise, enthusiasm grows, and the tape begins to sing. But that song fades sooner than most care to notice. The public arrives late, as always, filling the air with noise just as the wise begin to leave. You can see it in the volume, in the widening spreads, in the unnatural calm before a sudden break. The market gives warnings, not words. It's the trader's job to read them before they turn into losses. Exiting at the right time is not a calculation alone. It's a state of mind. It demands detachment from the thrill of profit. When a position runs well, ego grows alongside equity. The inexperienced man believes he's in control. The seasoned one knows he is only in tune for a while. The moment that harmony begins to falter, the professional withdraws. He doesn't wait for proof, because proof in the market comes too late. He sells when he feels the rhythm shift, when the market's dance grows uneven, when confidence in the crowd becomes too loud. A market top is not defined by price. It's defined by behavior. It's in the change of tone, when buying no longer pushes prices easily, when rallies start to die sooner, when news that should lift the market only manages to hold it steady. That's when the smart money is quietly cashing in, and the talk shifts from opportunity to certainty. Certainty is poison. When everyone agrees, there's no one left to buy. The wise trader senses this imbalance and begins to scale out. Not all at once, but deliberately, carefully, without drama. The novice watches prices hit new highs and believes he has time. He wants more, always a little more. He reads headlines that praise his judgment and feels validated. But the tape doesn't care for praise. It only measures behavior. When he finally decides to sell, he discovers that others thought the same, and the exit narrows to a single crowded door. The market doesn't ring a bell, but it slams the door with finality. The quiet exit is an art. It's guided by observation, not emotion. It's recognizing that the easy money is made and that what remains belongs to gamblers. It's seeing that the tape no longer moves with energy, but with exhaustion. The trader who survives long enough learns that there's no shame in leaving early. The price may rise a little higher, but that small extra gain often costs peace of mind, and that peace is worth more than the last few points. Sometimes the market tests you after you've sold. It climbs a little more, as if mocking your discipline. The untrained mind takes it personally. It wants to re-enter, to chase what was already captured. But the disciplined man smiles in silence, because he knows that the market's final thrust upward is only the death rattle of the move. It's the crowd's last celebration before the lights go out. He's seen it too many times to be fooled again. The trader who exits with precision doesn't need to be right about the exact top. He only needs to be wrong less disastrously than the rest. He understands that the market will always tempt him to stay, with greed, with pride, with whispers of just a little more. But he also knows that the market never rewards hesitation. The tape has its own heartbeat, and when that pulse slows, he steps aside. There's a kind of stillness that follows a perfect exit. No cheers, no applause, only a quiet recognition that the battle is done. The ticker will continue to move. The noise will return, but the trader has already locked in his truth, that the market's music is for those who know when to stop dancing. The market rewards discipline and punishes attachment. The moment a trader begins to care too deeply about a single position, he ceases to think like an observer and starts to think like a believer. And believers in the market always pay the price. The tape does not care for devotion. It does not honor conviction. It only answers to truth. The truth written in the numbers, in the silent movement of price and volume, in the tone that changes before the eye can see it. When emotion enters, reason departs, and that is when the market begins to teach its harshest lesson. Every trader starts a position with hope. Hope is natural. It's the spark that makes one act. But what separates the successful from the ruined is how quickly they learn to let that hope go once it turns into attachment. A trader can hold a position too long not because it makes sense, but because it feels personal. He begins to talk to the market, to argue with it, to insist that he is right and that it is wrong. But the market never argues back. It simply takes its due. It humbles the ego that thought it could reason with reality. A position is not a companion, not a friend, not a reflection of one's worth. It is a tool, temporary, expendable, useful only as long as it works. Once the reason for entering the trade fades, the position becomes a liability. The market is a battlefield, and positions are soldiers. You send them to fight. You do not marry them. If they serve their purpose, you reward them by closing them out. If they start losing ground, you dismiss them before they turn against you. The trader who hesitates because of sentiment loses more than money. He loses clarity. The tape offers signs of danger long before disaster strikes, but only to those who watch without bias. The attached trader can't see them. He filters the data through his desire. He reads strength where there is weakness, opportunity where there is exhaustion. He starts seeking confirmation instead of information. He reads news that supports his view and ignores what challenges it. He finds comfort in opinions rather than truth in observation. This is not trading, it's self-deception dressed as conviction. There is a strange intoxication that comes when a position begins to move in one's favor. Profits feel like proof. The trader starts to think the market agrees with him, that he has found some secret rhythm no one else can hear. But markets don't agree, they merely move, and when that movement changes, the same position that once made him proud begins to mock him. If he's fallen in love with it, he won't be able to let it go. The memory of how it made him feel will cloud his judgment, whispering that it will come back, that all he needs is patience. That whisper has ruined more men than any crash. The great discipline lies in learning to treat every trade as temporary. Every position must justify its existence each day. It doesn't matter how well it performed yesterday, or how brilliant the entry looked. If the market's tone changes, the trader must change with it. Loyalty belongs to the truth of the tape, not to the ghosts of yesterday's glory. The professional mind knows that detachment is strength, not coldness. Emotion belongs outside the market. Inside, there is only arithmetic, observation, and control. When you fall in love with a position, you stop thinking about risk. You stop asking what could go wrong. You start defending instead of evaluating. And in the market, defense is death. The trader who refuses to admit error will keep feeding the same losing position until it consumes everything he built. It's not the loss that destroys him. It's the refusal to face it. The longer he waits, the deeper he sinks, telling himself that a rebound will make him whole. But the market does not heal pride. It exposes it. The dispassionate trader cuts quickly, without hesitation. He does not mourn the loss because he knows it is part of the craft. He does not feel betrayed when a setup fails, because he never gave it his loyalty. He treats every position like a stranger passing through, valuable only while it serves his purpose. Once the conditions change, he closes the door quietly and walks away. The crowd may call him cold, but that coldness is what keeps him alive. There is power in walking away at the right time. It restores balance, clears the mind, resets the perspective. Each exit, when done without emotion, sharpens the instinct. The trader begins to see patterns others can't, because his vision isn't clouded by hope or attachment. He learns that survival in this game isn't about being right, it's about staying flexible. He learns that love in the market is the slowest form of self-destruction. A position is not a home, it's a test, and the market is always grading in silence. Patience is not silence. It is the quiet act of control, the discipline of allowing the market to unfold at its own pace, without forcing it to obey your desire. Most traders ruin themselves not because they choose the wrong side, but because they refuse to wait for the right moment to leave. They treat time like an enemy. But the wise know that time, when handled correctly, is the only real ally. Every profitable trade matures like fruit on a branch, and only the patient hand knows when to pluck it. The market pays those who wait, not those who rush. It's tempting to take a profit early, to lock in what feels safe, to avoid the fear that the next tick might erase your gain. But that fear is the thief of greatness. The crowd exits too soon because they confuse movement with progress. They see a small profit and mistake it for victory, never realizing that the true wealth of a position comes from allowing it to breathe, to expand, to finish its full cycle. The wise trader waits for the market to pay him to exit, not for his nerves to demand it. The tape tells its own story. When a move is young, it moves with strength and conviction. The swings are broad, the volume alive, the reactions sharp but purposeful. In this phase, the trader's task is to do nothing, to sit still and let the current carry him. The real challenge begins when that current slows, when the tape hesitates, when prices begin to advance with less enthusiasm, when each rally feels thinner than the last. That is when the trader must start to listen more carefully. The market does not shout when it's done. It sighs. A trader who acts too early turns his profits into crumbs. A trader who acts too late turns them into regrets. Between those two extremes lies the narrow bridge of patience, knowing when to let go, not out of fear, but out of recognition. The tape will tell you when the move is tired. It will tell you when the crowd that once doubted now believes completely. It will tell you when excitement replaces caution and when headlines begin to agree with your position. Those are the moments when the wise quietly prepare to leave. There's a subtle irony in this business. The longer you can hold your winners, the less you have to trade. But to hold a winner, you must first master yourself. The market's noise, the minor pullbacks, the small corrections, the sudden dips are designed to test your resolve. Each shakeout is a question. Do you really believe in your position, or do you only believe when it's easy? The impatient trader answers by selling. The patient one answers by waiting. He waits not blindly, but with full awareness that the trend is still intact, the structure still sound, and the story not yet finished. There is a certain serenity in waiting for the market to give permission to exit. It means you no longer act from emotion, you act from evidence. You're no longer trying to outthink the market. You're listening to it. The best exits often feel uncomfortable because they arrive when everything still looks good. The crowd is euphoric, the news is glowing, and yet the trader senses that the pulse has weakened. He feels it before he can explain it. That is the moment of mastery, when patience has transformed into foresight. A market trend is like a conversation. When it begins, the dialogue is full of energy. Buyers and sellers speak in rapid exchange, testing each other's conviction. But over time, one side grows tired. The pauses lengthen. The responses come slower. The story reaches its natural end. A wise trader doesn't interrupt the conversation. He listens until the tone changes. When it does, he leaves the room quietly, taking his share and leaving the rest for those who came late. Impatience is the enemy of every great exit. The crowd wants action, movement, excitement. But real profits are born in boredom, in the quiet hours when nothing seems to happen, and the position simply grows. Waiting is not inactivity. It's preparation. It's the art of allowing the market to complete its sentence before you respond. Most traders speak too soon. The few who wait for the full story take home the prize. To let the market pay you to wait is to trade without vanity. It means surrendering control, allowing the price to dictate the pace, not your emotions. It means sitting through discomfort, enduring the small pullbacks that test your will. It means trusting the rhythm that gave you the profit in the first place. The market rewards those who can endure stillness. The weak rush to exit for pennies. The patient collect dollars. The difference is not in intelligence, but in the courage to do nothing while others act in haste. There is a moment in every trader's life when the market begins to whisper a truth he doesn't want to hear, that his position is wrong. Most ignore it. They reach for comfort instead of clarity. They add to the losing trade, convincing themselves that a lower price means a better bargain, that they're being bold while others are afraid. But courage is not in defiance. It is in surrendering to the evidence. Averaging down is the trader's way of arguing with the market, and the market always wins that argument. When a position moves against you, it's not an insult, it's information. The price is the market's vote, and if it votes against your judgment, you must listen. But pride blinds the senses. The trader tells himself it's only temporary, that he knows more than the crowd, that patience will turn the loss into profit. And so he doubles down, adding more to a bleeding trade, building a tower of hope on a foundation of denial. What he doesn't see is that every new purchase is a deeper commitment to a wrong idea. Every addition a brick sealing his own trap. The first loss is always the best loss. It's clean, quick, and honest. It's the market's way of saying you were wrong, try again. But when you start averaging down, that first small mistake begins to multiply. You're no longer managing a trade. You're managing your emotions. You stop looking at the chart and start looking at your account balance, wondering when the pain will end. Each new purchase feels like an act of control, but in truth, it's submission. You're no longer trading the market, you're trading your ego. Markets move not to reward fairness, but to punish stubbornness. A stock that falls does so for a reason, and that reason is always larger than your opinion. It may not reveal itself at once, but the tape knows. The tape always knows. When price keeps falling after you buy, it's not because the world is wrong, it's because your timing is. The longer you fight, the deeper the wound. The market doesn't care about your reasoning, your analysis, or your conviction. It only cares about one thing, the side you've chosen, and whether it can afford to let you stay there. Averaging down gives the illusion of lowering risk, but it multiplies exposure. It's like adding weight to a sinking ship, because you believe it will steady the waves. Each new share feels cheaper, each entry feels logical, until the whole structure collapses under its own weight. What began as a calculated position becomes a desperate prayer. The trader tells himself he's investing now, not trading, that this is a long-term play, but he's only changing labels to avoid admitting defeat. The market reads that weakness like blood in water. There's a peculiar comfort in the act of averaging down, a false sense of control. You tell yourself you're taking advantage of the panic, that you see something others don't. It feels like mastery, but the tape doesn't recognize hope. It recognizes strength. When prices continue to slide despite your purchases, that's not opportunity, that's confirmation that you're on the wrong side. The trader who learns to cut losses instead of feeding them will live to trade another day. The one who averages down becomes history's footnote, remembered not for brilliance, but for stubborn ruin. The professional's strength lies not in his courage to hold, but in his ability to release. He knows that protecting capital is the first rule of survival. Every trade is a probability, not a promise. When that probability turns, his loyalty ends. He doesn't add to a mistake in the name of faith. He sells, even if it hurts, because pain accepted early is mercy compared to pain endured late. He'd rather be out wishing he were in than in wishing he were out. The market's punishment for arrogance is swift. It doesn't shout, it erodes. One day you notice the loss has doubled, then tripled. You justify, rationalize, defend, and the market listens, unimpressed. It keeps moving. It always moves, and by the time reality breaks through, you are no longer managing money, you are managing despair. Those who survive the lesson never forget it. They stop averaging down, not because they fear loss, but because they've seen what loss becomes when multiplied by pride. Every tick down is the market's way of asking, are you still sure? The wise answer, by exiting. The foolish answer, by buying more. They call it conviction, but it's really fear of being wrong. The great traders understand that admitting error is not weakness, it's strength. They know that cash is a position too, that survival is a strategy. To never average on the way down is to respect the market's authority, to bow to truth before it breaks you. The crowd chases perfection, the dream of selling at the top, of catching the last cent before the turn. But perfection belongs to poets, not traders. The market does not reward the man who tries to take it all. It rewards the man who knows when to step aside. The wisest exits always look early to the impatient. They are quiet, uncelebrated, almost modest. Yet those exits are what separate fortune from failure, because they are guided not by greed, but by discipline. A discipline born of experience, loss, and an understanding that every move in the market has a natural end. When a trade begins to move in your favor, it feels effortless. Each tick higher confirms your judgment, and each new high whispers of more to come. It's intoxicating. The mind starts to believe in endless continuation. You stop thinking of risk and start imagining reward. But the market is cruel to such optimism. It allows you to climb just high enough to lose your balance. The crowd keeps reaching, stretching, convinced that the next push will be the final one. That final push never comes. What comes instead is exhaustion, first invisible, then merciless. A professional trader understands that greed is the enemy of timing. The top of a move is never defined by price. It's defined by participation. When the last skeptic has joined the party, the end is near. When everyone believes there's no one left to buy, the wise man feels this change before it's visible. He senses the euphoria in the air, brokers bragging, headlines glowing, the crowd too loud to hear the warning bells. That's when he starts to slip out quietly, selling to the dreamers who think he's being foolish. He smiles because he's been there before, and he knows what follows celebration. Leaving something for the next man is not generosity, it's strategy. It's the act of surrendering the illusion of control. The market is a tide. It gives and it takes. Trying to squeeze the last drop from a move is like standing in front of the ocean and demanding one more wave. The man who sells too early keeps his capital and his mind intact. The man who stays too long loses both. The difference between them is not skill, but restraint. There's a strange peace in selling while others are still buying. You watch the price rise a little higher after you're out, and instead of pain, you feel relief. You've learned that the small gain left on the table is the price of safety, a cheap fee for freedom. The amateurs sneer at the early seller. They call him timid, conservative. But when the turn comes and the market erases weeks of gains in a single afternoon, that same man stands untouched, calm and liquid. He knows he didn't miss out. He escaped. Greed clouds observation. It makes a man blind to the signals that once guided him. He stops watching the tape and starts watching his profit. Each uptick becomes validation, each downtick a personal insult. He forgets that the tape doesn't care about him. It only moves. The moment he starts hoping instead of measuring, he's already trapped. The great traders never hope. They observe, act, and step away. They sell into strength, not weakness. And they do it while their hands are steady. Every trade has its natural lifespan. The beginning is doubt, the middle is conviction, the end is agreement. The crowd always enters at the end, drawn by stories of easy profit. They buy from the disciplined few who were there early, who understood that success in markets isn't about prediction, but preparation. The professional doesn't need to catch the absolute high. He just needs to recognize when the odds have shifted. Once the balance of power turns from fear to greed, he knows the cycle is closing. Markets reward humility. The humble trader accepts that he cannot know the exact top or bottom. He takes the heart of the move, the strong living part, and leaves the edges to the gamblers. That's why his career lasts while others burn out. Each time he exits early, he buys himself longevity. The profits he leaves behind are small compared to the peace of mind he preserves. The latecomers can have the scraps, he keeps the control. To always leave some for the next man is to trade without vanity. It means refusing to play the hero, refusing to be the last man standing in a burning theater. It means walking away when the applause is loudest, when the crowd thinks you're wrong, and when the temptation to stay feels irresistible. That's when mastery reveals itself, not in how much you gain, but in how wisely you decide you've gained enough. Most traders believe that the act of buying defines them. They obsess over entries, over perfect timing, over the thrill of being right at the start. But the truth is that buying is the easy part. Anyone can press the button. Anyone can take a chance. The real test begins afterward, in the waiting, the watching, and finally, in the lace. The exit is not the end of the trade. It is the trade. It reveals who you are when the market stops flattering you and starts demanding discipline. Every trade begins with a story you tell yourself. You convince your mind that you see something others don't, a pattern, a signal, a moment of opportunity. You build conviction and act on it. Then the market begins its dance, moving up, down, sideways, testing your patience and your nerve. The moment of entry fades into the background and what remains is endurance. Each tick tests your belief, and with every new high or low, you face a choice: stay or go. The exit is not mechanical, it's psychological. It measures not your knowledge, but your ability to obey your own plan. The amateurs exit in panic or greed. They sell because they're scared the profit will disappear, or because they think the next minute will bring ruin. They chase perfection in hindsight, regretting every move that wasn't the exact top or bottom. The professional is different. He exits with calm precision, because his decision was made long before the trade began. He doesn't wait for emotion to instruct him. His exit is prepared, measured, rehearsed in silence. When the moment comes, his hand doesn't tremble. He acts not because he feels it, but because he knows it. To trade well is to master detachment. The market will tempt you with reward and taunt you with regret. One moment it offers you victory, the next it threatens punishment. But the true trader knows that neither matters. He focuses not on the win or loss, but on the execution. The exit is a statement of control, control over impulse, over hope, over the endless noise that fills the ticker tape. To exit at the right time is to declare that you answer to reason, not emotion. There is a rhythm to the market that only patience can hear. It's subtle, but once learned it changes everything. The market breathes in trends and exhales in corrections. The untrained ear mistakes noise for signal, but the seasoned mind waits for the shift in tempo, that slowing heartbeat before reversal. The exit, then, is not an act of guessing, it's the art of listening. The tape begins to change tone before it changes direction. Prices stop moving with conviction, reactions become dull, rallies feel heavy. The master recognizes the change and slips away quietly, long before the crowd realizes the music has stopped. In every profession, success comes from knowing when to walk away. The market is no different. Holding too long is not courage. It's vanity disguised as faith. The trader who believes the move will last forever is not optimistic, he's deluded. The exit is humility in motion. It says, I've taken what the market gave me, and I do not ask for more. That humility builds longevity, and longevity is the only edge that endures. A trader who cannot exit correctly will never keep what he earns. Gains made in brilliance vanish in recklessness. It takes one wrong exit to undo a dozen right entries. The market does not forgive those who overstay. It seduces them first, with small pullbacks that recover, with false rallies that promise renewal, and then it breaks them. The exit must be immune to seduction. It must come from logic, not longing. To survive, one must trade without emotional gravity, always ready to release what no longer serves. The crowd fears the exit because it feels like loss, even when it's profit. Leaving means admitting the move is over, that the excitement is gone. But trading is not about excitement. It's about preservation. The exit is where preservation lives. It's where you prove that you can protect what you've built. The market gives opportunities endlessly, but it rarely gives second chances to those who can't let go. A perfect exit doesn't call attention to itself. It doesn't feel dramatic or heroic. It's quiet, almost invisible, like the closing of a door in an empty room. No applause, no fanfare. Just a moment of calm recognition that the trade has fulfilled its purpose. The professional doesn't wait for confirmation or regret. He simply moves on, ready for the next rhythm, the next opportunity. The market rewards that quiet kind of strength, the kind that leaves before it's forced to, the kind that values discipline over desire.